Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for May 2nd, 2024. Well, yesterday, my goodness, what a whipsaw we had after the FOMC announcement. Just, man, really rallied hard and then took a whole bunch of it back at the end of the day. And now we're trying to get a gap up going here this morning with a little bit of bullishness heading into a massive day of earnings and economic data. So let's take a look at what happened overnight. First off, we had Asian markets kind of mixed overnight. Shanghai was closed due to their Labor Day holiday. And if you look across the rest of the indexes, we just had kind of a mix and modest gains and losses, except for Hong Kong. Hong Kong shot up 2.5% last night. Let's take a look at European markets. European markets this morning are also kind of mixed in modest gains and losses here this morning. Probably still reeling from the uncertainty of that volatility that we saw here in the United States. So we'll want to be keeping an eye on that today. But that being said, U.S. markets are really trying to push for a big move to the upside this morning, with Dow futures up substantially and NASDAQ futures up almost 1% here in the pre-market, despite the fact that, we just haven't had that greater response in a lot of those earnings. We do want to remember that we have a Apple earnings report after the bell today. If we take a look at oil prices here this morning, oil prices are a little bit on the green side. They were sharply down yesterday, but this morning we've got oil up 52 cents at 79.52 a barrel. Brent being up 61 cents at 84.05 a barrel, and natural gas is bouncing back up a little bit, up 4 cents. One of the reasons we're getting this response is apparently everyone is speculating that the U.S. will start refilling its strategic reserve again. So keep an eye on that. Gold continues to struggle here this morning, and we had a nice little rally yesterday in gold and silver, but gold dropping right now down $5 an ounce. Silver is slightly lower here this morning as well. Copper is down, platinum is up, but palladium is lower. And then, boy, that crypto area of the market had a really rough day yesterday, but we're getting a bounce back up there as well. Bitcoin is looking up about $320 a coin at the moment. Still below that, well below that 60,000 level in that index. And we're mostly green there on the cryptos, trying to get a little bit of a rebound here today. So let's take a look at our bonds. Our bonds this morning, they have come down pretty nicely, actually, but they're still stubbornly high. First off, we've got a 2-year bond at 4.94%. We've got the 10-year at 4.61%. That 30-year is staying pretty stuck up there at 4.75%. So we'll want to keep an eye on those bonds. We continue to have the bond market largely disagreeing with the rally or the bullishness that we have seen in the market. Let's take a look at, I guess we got all of that done. How about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can gain a little bit of information about how we want to approach the market for today. Remember, we want to shake off that bias of what we want the market to do and really look at the chart for what it is. So first off, on our diamonds, you can see we're trying to get a little bit of a push here this morning, and I think there's every reason to believe, as long as the economic data doesn't cause us a little bit of problem today, that we could push on higher and maybe retest up in here. First area of resistance, I would say, would be right up into that area. See if we can break through there. If we can break through there, then I'm going to suggest coming up here, retesting yesterday's high would be likely, and pushing into this little level of resistance. Beyond that point, we'll be trying to stretch on up here and test this bigger level of resistance, price resistance in the chart. Now, you will want to keep in mind, as we push up into those areas, we're going to come in contact with that declining 50-day moving average. So we'll have to keep a pretty close eye on that as well. If the bears were to find inspiration today, pushing on lower, well, of course, the first thing I would probably suggest is that reversal back down to retest this low here that we saw yesterday. So pushing down here, if we hold this support, I think we're in pretty good shape. But if we were to fall below that area here in the chart, then I think we're going to start testing some of these lows down in here. And unfortunately, if we break through this area, well, I think we have some pretty big drops that could occur in the market to find those next levels of price support. So fingers crossed for the bulls that they hold in here, I guess. If we take a look at our SPY, big whipsaw in there yesterday, closing down here below our little upside trend that I have drawn, just tiny bit below, and this morning we're trying to gap back up. So first step is we need to try and push back up through this level right through here, get back up through that area, and if we can do that, I'm going to start looking at about mid black candle there, that middle area, for a little bit of price resistance, and then we're looking to come up into here to test this resistance, yesterday's high, the top of that big black candle, and of course the downtrend here in the chart. Once again, we'll be running into fairly significant moving average resistance, and as we push up here into that level. Now, if we take a look at our QQQ, our NASDAQ trying to push back up here this morning as well, closed with a lower low yesterday, as you can see, pushed below that black candle at the close, leaving quite a little bit of concern there at the end of the day, but trying to gap up substantially here this morning. Now, if you look across here, there is a little resistance right there through the middle of that candle. We'll want to be watching that first to see if we can break through there. Breaking through that point, we're pushing up into this more important price action resistance on the top of that candle, and then up through there, the really strong resistance would be right up here at this last recent high in the QQQ. Quite a little price resistance up there. Once again, we push up into that zone, and we're going to start dealing with that moving average, 50-day moving average, starting to roll over and decline here on the NASDAQ. Now, if the bears were to find inspiration here today, sure wouldn't be that hard of a picture to see that we could first drop down here testing yesterday's low. And then beyond that point, we're probably going to just move on through sequentially in these levels in the chart to retest these lows if we push down into those areas. So keep a close eye on that. Now, if we look once again here at the S&P 500, we're a long ways away from our 200-day, but you could really see if we were to break this area of support in the QQQ, then the trip down to 200 would seem pretty likely. No signs of that, at least today. And then if we take a look at our T21, our IWM. We better look at that. If you ever wondered if this is an edited video, it's not. I do this live. Record it all in one shot. If you take a look at our IWM also showing well, that gap up this morning, trying to get some bullishness going. We're going to deal with a little bit of price resistance right through here. First off, if we can break through that, then I'm going to suggest coming up here to test yesterday's high and the top of this little candle right in here. And we're going to run into, well, a pretty good price resistance area here in the chart. If we can push through there, then I'm going to suggest maybe we start pressing up into levels just above there to see if we can start dealing with some of those price resistance areas of the chart. Now, keeping in mind, we are going to be pushing right up here into that 50-day moving average pretty quickly. So watch those moving average resistance levels as well. If we take a look at a potential downside move, if the bears were to be inspired, then pushing on down, maybe we'll test the high of these little candles right here first, and then we would push on down, testing that trend in the lower side of those candles. Certainly looks like a possibility. Beyond that point, once again, we start moving down kind of sequentially through these lows to test these areas in the chart. Breaking down below this is where we would come into quite a little bit of fear. Let's take a look at our VIX. Now, our VIX, interesting day yesterday. We were pushing down, breaking this support on that big rally up after the FOMC, and then as those sellers came back in and we whipsawed, we turned around and came all the way back up here, almost testing this resistance area in the chart. So I don't know that we can really predict what's going to happen here at all. In fact, I am not a person that likes to predict at all. I just like to follow the price action. And you could certainly see both scenarios occurring here on a big gap up this morning like we're getting at the moment. Back down here maybe testing, saying, now there's no fear here. But then again, if our economic data kind of throws a monkey wrench into that enthusiasm of the bulls, we could be right back up here really easy. So I would continue to expect considerable volatility in the market, despite the fact that the VIX has tried to ease that off here. There is still an awful lot of uncertainty for us to deal with here in that chart. One thing is kind of important, we're still holding that little upside trend here in VIX, so keep a close eye on that. Let's take a look at our T20s. Our T21-22 indicator, well, we got a little bit of relief in it yesterday, and so the bulls saved the day here, I guess. By the end of the day, they still had more stocks moving up than moving down based on the T21-22 indicator. Might not have felt that way watching us selling off into the close, but they did hold up. Okay, so we had a little bit of upside relief in here, and if the bulls can continue to find the inspiration that they're working on here this morning, well, we certainly have plenty of upside opportunity for them to work if they can maintain that that bullish inspiration and energy to the upside. Now, if the bears were to come up with some inspiration here, that means that we've also opened a wider opportunity for some selling if the bears were to just find a reason to attack today. And certainly there's enough data out there that it is theoretically possible for sure. So watch carefully here. A lot of volatility is likely. Let's take a look at our T2108. Now our T2108 also showed us that those bulls held on at the close. Despite the volatility, we had a little tiny upside turn here in T2108. You'll want to notice that we're still well below our 50% area here in T2108. And as we start pushing back up, if we start pushing back up, we're going to run into these consecutive levels of price resistance in the chart, heading back up toward that 50% area here on T2108. Our T2107 still hanging in there as a trooper, hanging in above that 50% area. You can see hooked just a little bit higher yesterday. We came back down and we tested this area in here, and then was able to hold. So the bulls are in control here, holding above that 50%. Well, as we start pushing back up, we'll start dealing with these price resistance levels in the chart. And of course, if the bears were to find that inspiration, it's not that hard at this point to see a drop below that 50% area on T2107. So just be a little bit careful here, particularly in the morning. We're seeing a lot of whipsaws here in the mornings. If we take a look at our T2101, well, our T2101 actually showed us, despite those big whipsaw swings, the market breadth declined yesterday. So this is a tough one for the bulls right now. We really need to see the bulls. If they're going to push really hard, we need to see that breadth expanding. And there may be a reason where that could start here pretty soon, because a lot of the companies are coming out from underneath their blackout period where they can't do corporate buybacks and things like that. So we might start seeing a little bit of corporate buyback activity adding to some breadth here for the upside. But at the same time, we have those CTAs in a position where they've been reducing their risk, their trend following tools, and our trends are down. And so they have been reducing positions. So we do have that possibility. If the bears were to engage, we could even see that breadth increase on a bearish wave. So keep a close eye on that. What we don't want to see here, at least in my opinion, is to see us rally up in the market and continue to see this breadth decline. It means the bulls are running out of that upside energy. So watch that carefully. Let's take a look at our economic calendar here for today. And our economic calendar, well, we've got a few things that we're going to need to be paying attention to here today. First off, if you look right in here, this morning, motor vehicle sales will be coming in. We've got a Challenger job cut report. We're going to have international trade in goods, and our international trade in goods is expecting that this is going to show a tiny little increase in the negative deficit here on that, so we'll want to watch that. We've got jobless claims coming in this morning. Now our jobless claims continue to be hot. They're expecting 211,000 in here. If the ADP is anywhere close to right, then it's possible we could see this come in hotter than expected. That would be bearish for the market, so watch that closely. Our productivity and cost number, we're looking at productivity here in the United States falling dramatically to a 0.9 by consensus from 3.2, and then you'll want to notice that the unit labor costs are going up substantially. That's inflationary, not something that you want to be seeing here in the market. So keep a close eye on that today. That would be a reason perhaps that the bears could engage. And then factory orders, we're looking for those to move up to 1.6 from 1.4, so watch that. And then we've got a natural gas report and a couple of bond auctions heading into the Fed balance sheet. Now remember, we have that employment situation coming here Friday morning, but that won't be in focus until later in the day once we get through that report from Apple. Let's take a look at our earnings calendar for today, and my goodness, our earnings calendar is chock full. There's no way I can cover the number of earnings in here. We have one of our biggest days of earnings reports, just a massive number of reports coming in. So kind of keep that in mind as we go through the day. We could see a lot of volatility. One of the things we're really seeing is if a company were to miss, they get heavily punished really quickly. So we're going to be looking at stocks like BDX this morning. Nice pop here on BDX. We've got Cardinal Health. We got CNK that will be reporting. We're going to hear from MT. We're going to hear from Baxter. We've got reports coming on Kellanova. We've got Kimco Realty that will be in there. We're going to hear from Iron Mountain. And these are just a tiny few. BTU will be reporting today. We've got SO reporting today. Just a massive number. Shake Shack will be in here today. So expect considerable volatility around these numbers. And then, of course, this afternoon, the most notable is going to be Apple. Will be reporting today. And looking at the Apple chart, you can see there is definitely some concern as to how Apple will report. And just keep in mind, Apple is market moving. It can move the entire market because it has such a massive influence on it. So watch this carefully today. If Apple were to stumble, then we could see some selling in the tech sector. If it comes in strong, then hey, we may be running to the upside here pretty quickly. We'll also hear from Amgen here this afternoon. You'll want to be keeping an eye on that. That's been trying to work its way a little bit higher here lately. We've got Consolidated Edison that will be in here. We've got DLB, Dolby Labs, in here. LOCO will be in here today. GoDaddy will be reporting. So we've got quite a few reports here today. Just prepare for considerable volatility as we move through the day with all of these earnings reports. Let's take a look at a few stocks that could be setting up. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and then click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Also helps support the effort in putting these out every day. So thank you so much to everyone who does take the time to do that and even shares these video links out on your social media feed. That helps a lot. I truly, truly appreciate it. Let's take a look at a few stocks that could be setting up. Remember, guys, these are not recommendations to buy or sell any security. You've got to do your own due diligence. Be very, very careful in this market and make sure that you're paying close attention to these pops and drops, these gaps that we're seeing every single day. The whipsaws are creating a lot of pressure. So make sure you're setting any stop losses that you put into place. Make sure you're setting those based on the price action of the chart, because this volatility is chopping a lot of accounts to pieces with these big point swings. So be prepared for additional whipsaws as we go throughout the day. First off, let's take a look at our dollar. US dollar really showed some strength yesterday, pushing to the upside. Now, I would expect this to show a little bit of pullback, a little bit of relief maybe today with those bond yields coming in just a tiny little bit. But let's watch that closely. The cost of money continues to go up. We'll have to keep a close eye on that. And I would be keeping a close eye on TBT and TLT. TBT had a nice little surge yesterday to the upside. That's showing those bond pressure going up. This is the short on bonds on the 20-year Treasury. So still holding that upside trend and maybe setting up for more upside here in that chart. However, if you saw what the the Treasury decided to do yesterday, they are going to start buybacks, meaning that they are going to start buying back. And here's a clue that you want to be paying attention to. The big banks are running in to some major problems here in the market because of these bonds. And what the Treasury is going to do is start bailing them out. They're going to start buying up those lower yielding bonds in favor of some higher yielding bonds and start doing those buybacks here from the Treasury Department. So you'll want to keep an eye on that. It is entirely possible that what Janet Yellen is trying to do is relieve the pressure here that we've seen in the bonds and trying to influence that bond market to start moving back up. That would mean the Treasury yields would start coming down and we could see that bond market coming up. If you take a look at this TLT, we have a little pattern starting to shape up in here. It's possible we could have a little bit of a head and shoulders bottoming pattern coming in here on TLT. Now certainly this is continuing to downtrend, but if you'll notice that downtrend, we're kind of sneaking out from underneath here. If Janet Yellen is successful, she could potentially set off a bit of a short squeeze here in TLT and start pushing things back up here on TLT. So watch that carefully here. I don't know if she'll be as successful as she would like to be in relieving some of that bond pressure, but they're going to have to start helping out the banks here. And that's one of the first clues that, we've got a little bit of quantitative easing in a sense, because we're starting to do make those little signs that we need to help the banks. So watch that carefully here in TLT. Let's also take a look at XLF. If we look at the financials, you can see financials had a really big pop there during the day, like almost everything came right up into that downtrend. Isn't it amazing how a trend line can do that? We ran right up into that downtrending line and then backed away from it. But if the banks see this as a helpful step, the Treasury buybacks, we might actually see this continue to rise. So notice we have that possibility. We're in a wedging pattern here on the financials where we could get a little bit of push to the upside, break that downtrend, and start to see more bullishness there. If the pressure continues here on these banks with the Treasury staying high and Janet Yellen doesn't get that short squeeze to trigger off here in those bonds, then we could really see that breakdown here as well. I think we got about a 50-50 shot that we break the downside trend or we break the upside trend here. So watch that pretty carefully here in XLF. Now when it comes to our regionals, we've seen reports here that hundreds of these regional banks are at the brink of failure. There was a story on CNBC just yesterday, I think, on that. So we'll want to watch this closely. Now KRE held up much better yesterday afternoon, pushing up. So I think they're really looking forward to that Treasury buyback to try and help out some of these regional banks in here, because they are in pretty serious trouble. But watch this carefully. A little upside trend. There's that downside trend here in the chart. If they can continue to follow on through and break up here with that relief or that action of the Treasury trying to help them out, we could actually see those start to break higher here. So keep a close eye on that. Let's take a look at our energy markets. Boy, we have really had quite the sell-off here in energy, and they've really made some decisions, breaking trends here and upside trends and starting downside trends in the market. Now there is some speculation here today that as prices drop, that the president will start refilling the strategic reserve. And if he does, that could have an upside impact on oil as they start bidding to refill that reserve. So keep a close eye on this as we push back up here. If we push back up, that would set up that next opportunity short here in oil if we continue to see that problem. Now, of course, remember, geopolitical situations can change this really quickly. I mean, on a dime can change this. So we'll have to keep a close eye on those geopolitical situations as well, because anything that is a disruption in the Middle East usually has an impact on energy prices. So watch them closely. Let's take a look at aerospace and defense area. Aerospace and defense, this RTX continuing in this really tight, choppy consolidation here. Tried to pop the volatility the last couple of days, pulling that back. I would still keep an eye on RTX. If I were to take and redraw this trend right here from this low right across here, you can see there is a possibility we could still consolidate more here in RTX, but I would watch that closely if it has that opportunity to take off early to the upside. The trend is certainly bullish. We've got a major resistance area up here, and realizing that this would be a breakout to all-time highs, that could be interesting here. So keep an eye on RTX. LMT is another one in that sector that I would be watching. Notice it's dealing with a support. We got a little upside trend, and we've got a significant resistance above. So here again, we're kind of range bound on this one, but if we get any kind of upside move in here, watch for that breakout, and that could really start moving to the upside here. So keep an eye on LMT. Let's take a look at some of our tech sector areas. NVIDIA. NVIDIA holding up here. We broke that trend to the upside. Nice little pullback here in that chart. This sets up a pattern that would suggest that if we can hold in here, NVIDIA may start pushing back to the upside. So keep an eye on that. If you like these big tech giants, that might be something to be looking at or watching closely here in NVIDIA. I'm not going to say the same about AMD. AMD is not looking so good here, breaking down pretty substantially, breaking another level of price support. I would say any rally back here in AMD that confronts these resistance areas in the chart could just set up the next opportunity to the downside. So watch that carefully here in stocks like AMD. And of course, we're going to hear from Apple today. And Apple has broken this downtrend back to the upside. We did that once before, and then whipsawed this right back down to a new low. So we're breaking up here in anticipation of those earnings. We'll want to watch this pretty closely, because I think it's nothing more than a coin flip on Apple. We have heard stories that their China sales are off. They have had 4 declining quarters in sales. I know there's a lot of hope that maybe a resurgence is happening in device purchases. But what we're seeing in some of these numbers on retailers, specifically like Starbucks and things like that, those high-priced things out there are consumers are making some different decisions, and they're just not buying. I would watch this carefully here. Again, I think it's a coin flip. We could bounce hard here in this chart. Didn't mean to grab that. We could bounce hard. We could certainly sink hard. So be kind of careful here as we go into the afternoon waiting on this big tech report. Certainly is a market mover, and anything is possible after that comes out, depending on what we have revealed there. So with that, everyone, I want to wish you all a fantastic day. Thank you so much for being here today. Thank you for all of the kind support of the channel, sharing these videos on your Facebook groups and things like that. I really, truly appreciate it. Everyone, take care, be safe, and I'll see you right back here bright and early Friday morning. And as always, I wish you all the very, very best.